Yeah, I've
Good
hit record.
evening.
You can.
Good evening, everyone, and welcome to our presentation, Start Your Own Business. This WebEx is being brought to you by Midland College Business and Economic Development Center, which will be referred to as the BEDC. My name is Leticia Martinez, and I'm so excited to be joined by fellow BEDC counselors Victoria Santiago and Paul McCord. Starting a business is not easy, but we want to be here to help. The BEDC's mission is helping people increase credit scores, purchase homes, and start or expand businesses. Don't forget the chat box is open, so please feel free to ask questions or provide your telephone number, and we'll be glad to call you back on a one-on-one counseling session. So let's get started. The business registration. Primarily, the most common types of businesses that we see here at the BEDC, our business startups, are the sole proprietorship and the LLC. These are the ones that we'll primarily focus on tonight, but we're able to also guide you in other business structures as well. As a owner of your business, you and your business are one and the same. This means that you'll pay taxes on any business income, profit, on your personal taxes, or if your business has any liabilities or account liable for that. The registration of your business provides credibility, and you're also able to pay a checking account and in your business name, and therefore you're able to keep your business expenses from your personal expenses, and as a proprietor, complete a Schedule C on your tax return. But basically, it's the quickest and easiest, most inexpensive way to form a business structure. You complete the assumed name certificate form, which is available at the Midland County Clerk's Office. You can download the page, fill it out. You do have to sign it and have it notarized, and then take care of filing it. So it's only like $1 here in the Midland County, and it's registered, and you do have to renew it every 10 years. So that's the sole proprietorship business registration. Then you can also use this form if qualified joint venture or a married couple doing a joint return who's opening up a business together. Next page. The most common type of business setup we see is a limited liability company. So the limited liability company becomes its own entity. This takes form 205 from the Texas Secretary of State. It's a certificate of formation, and LLCs are subject to a franchise tax. There is a perceived benefit that you can be protected from any potential lawsuits. However, in most cases, the person that is filing the lawsuit has recourse against the owner as well, primarily because as a new LLC, you don't necessarily have established business loan credit. It would provide some protection. The company acquires debt down the road, then therefore the company is liable for that debt and not the individual owner. So the limited liability company has its own identity. You complete the application at the Texas Secretary of State office. So you're registered to do business throughout the whole entire state of Texas. The cost is $300. So this is more expensive than the sole proprietorship. You can fill out the form yourself. You can choose to use an online legal form company like Rocket Lawyer or LegalZoom, or you can even go to a local corporate attorney and they can draw up the paperwork. Obviously the first one being the least expensive, but since you can go to some of these other sources for help, just realize that there will be a cost, and those costs range anywhere from $49 to perhaps $600. You are required as an LLC to have what they call a registered agent, which means that it has to be someone that they can make contact with that has to reside in the state of Texas. So there is a little bit of a catch with an LLC in terms of you have to have what they call a registered agent. And so some of these online companies will want to take on that responsibility, and so there will be a fee associated with that. Next page. The application is downloadable through via the Texas State Secretary of State. Like I said, it's a little more complicated than the DBA or assumed name. It's 3 pages long. It will ask you how you want the LLC to be formed. And so there'll be some questions there that you want to just be sure that are answered correctly. And that's why it's not a bad idea to have it reviewed if necessary. Next page. Okay, so we've gone through all that. You're registered, you're ready to do business. Here are some other little things that'll help you along the way. So open a checking account. As we said earlier, differentiating between your personal checking account and your business checking account will be important when you're trying to report expenses on your business. Insurance. Contact your current insurance agent. They can tell you all about general liability insurance. It's just very important for you to cover in case you do get involved in some third-party claim. If someone's injured or anything like that were to happen, you will be able to be covered under what's called a general liability insurance. Most insurance either refer you to someone who can help. Some types of businesses like electricians, barbers, restaurants, those are going to require either other special state licensing or county health department per se. So you could go to the Texas Department of Licenses and Registrations, and you will see a list there of those required licenses and certifications. It's also important to get a sales tax receipt. A sales tax permit, because even though you're not necessarily going to be selling products per se, the services that you provide, let's say you're a cleaning services company, some of the services that we provide are taxable entities. And you can also find that out by going to the comptroller's website, and you can see all the list of taxable services. And so just keep that in mind, that it's important, even if you think you're not selling something, to go ahead and apply for a sales tax permit. The other thing is the EIN, or the employer identification number. That's even if you're not planning to have employees. But this is kind of like your business's social security number. And so you don't want your personal security number associated with it. Do business. So again, you can go to irs.gov for that number. Next slide. So most of our business doing business out of their home, and so most of them do have homeowners insurance and some of the other bells and whistles that come with that. But if you're going to be leasing property, then you're going to want to make sure that you're taking care of your contents. Even though the property owner may have property insurance, he may not can take care of your content, your equipment, things like that, your work vehicles. In some cases, your employees or yourself might be handling large amounts of money. So you want to protect the company from any type of lawsuit there. And so therefore you might consider or should consider a fidelity bond. The company sees anything valuable or to be missing, or something was taken from either a home or a residence or business. Workers' compensation obviously is for if you have employees, and if your employees were to get either work-related injuries or illnesses, and this is something that's not necessarily covered by your general liability insurance. A surety bond would be you are a contractor per se, and this protects the consumer. So that contractor goes and gets the surety bond company, and protects the consumer if the work is not completed or the product is not delivered, then that bond would be able to take care of that consumer, and then the person can go back to the original contractor and get reimbursed, obviously, for those expenses. So some of these are designed to protect the consumer, obviously, or the customer at the end. And then if you provide professional services, I don't even know if my hairdresser has it, but there's professional services insurance or errors and omissions, which also would protect you from any claim that perhaps the customer was that you provided inadequate work. So those are the types of businesses and bonds that are available. Come see us at the BDC. We'll try to help you out depending on the nature of your business, and I'll be happy to turn it over to Victoria.
Hi, Letty. Thank you so much. Thank you so much, everybody, for being with us tonight. So I am going to talk about the infamous business plan. What is a business plan? So a business plan is basically a document that is going to explain your business opportunity. It's going to identify the market that you are hoping to achieve with this business. And it's going to provide detail of how your business is going to succeed this market, right? Also, you're going to include in this business plan your qualification and your partner's qualification or your management team, what qualification skills you have that are going to make your business successful, right? You're going to explain the resources that you require, and you're going to provide a forecast of the results that you expect to achieve in your business in a reasonable time horizon, okay? So this is very, very simple what a business plan is. So in the next slide, I'm going to talk to you of the characteristics of a successful business plan. What makes a business plan successful? First of all, you need your business plans to make the best case for the venture, for your business. You need to write it very optimistic, very also with a lot of knowledge and information, but you want to basically, whoever is reading your business plan, to fall in love with your business as you are, right? The second thing is you don't want to bury the exciting opportunity under a big amount of data. However, you do need to provide enough information for a lender to make a decision if to invest or not in your business, okay? That's number 3. And the last thing is your business plan needs to be engaging to read. Trust me, with all the data and forecasts and numbers, it can get a little like not that fun. But that's why in the writing part, you have to make sure that you have that optimism and that engaging in your business plan, right? So in the next slide, I'm going to tell you why it's important to develop a solid business plan. So first of all, the act of writing a business plan is going to force you to think through all the key elements of your business. And this is even for life. When you write down your ideas, you basically are forcing your brain to go through the thinking process from that cloud in your brain to your hand to your piece of paper. And then you're going to start discovering, okay, so I need this and I need this, and who can provide me this? So that process needs to happen. So you know, in order to materialize that business idea. The second thing that is important why to develop a solid business plan is because you should give your business plan, first of all, to somebody that you trust, a family member, a coworker, your business partner, a mentor, a teacher. You should allow them to read, like, again, somebody that you trust. You should allow them to read your business plan and ask them to give you an honest feedback. And trust me, you want that honest feedback. And A few things can happen from this. First of all, the basic one, you're going to identify any misspells, any grammar errors, or any ideas that because it's your brain and you read it, it makes perfect sense, but for somebody else, the idea may not be that clear. So all that is going to happen, right? If you have a third person reading your business plan. But also, if you ask for an honest feedback, they can tell you what weaknesses they have identified, or what missed opportunities you have, or what overly optimistic projections you may have done. And you want to find and fix this on paper on time, because this will improve your prospects with funders, with lenders. And this will reduce the chance of a future operation failure. Okay, so that's why this part is very important. Third point, a solid plan can be a blueprint for operating your business over the first 1 or 2 years of operations. And obviously, it's going to increase the likelihood of success. You always want to, all your forecast and all the information that you include in your business plan, you want to be at least 1 year. We recommend 2 years, and depending on the industry that you're going to open your business, it can also go up to 5 years, right? So this is important for you to know. You're not going to like start a business plan only taking 6 months. You have to at least have a whole year of project. And last, and this for me is like the most important one, you are going to be able to use this business plan as a budget for the first 1 or 2 years of your business. And why is this important? Because once your business starts functioning, you're going to be able monthly or quarterly to compare how your business is behaving in reality, how your expenses are behaving, how your sales are behaving. And you're going to be able to compare that with what you projected and what you budgeted. And if you do this on a monthly or quarterly basis, it's going to help you to fix whatever you need to fix fast. You won't wait until the close of the year to realize, oh my God, I spent more than I had, or I didn't sell enough. If you do this on a monthly basis or quarterly basis, you're going to be able to implement or take any measure that you require to fix whatever issue is presenting, okay? To implement a corrective action. So, what is the business plan format? I'm going to start by giving you a very, very easy tip. If you have Microsoft Word, the latest version, Microsoft Word includes templates for business plans, and I have to tell you, they are very good, actually quite decent. And it's not like one template fits all. Actually, they have a template if you are thinking to start a coffee shop or a marketing firm, like they have for different industries. And they have a very nice, pretty design, and has all the parts that a business plan should have. And in each part includes a paragraph telling you what kind of information you should include there. But if you check this and you find that, yeah, it really doesn't adjust to your industry or whatever your business may be, then you can use this very simple, easy one. The first thing you want to include in your business plan is your contents, because basically you want to give the opportunity to the reader that if they want to look for a particular piece of information, just go here and look at the page that has the information they want and go straight there. So that's important. Then you're going to include the executive summary, the opportunity, the company and its product or service, and its strategy, the management team, the marketing plan, the operation plan, the financial plan. And last, you're going to include the appendix. In here, you're going to put all that information that supports all the information that you have written in the first parts, okay? So you're going to include your resume and the resume of your business partners if you have them. If you have a market research, you're going to include it here. And also you're going to include here all the sales projections, spend projections, information of your vendors, et cetera, et cetera. All the information is going to be included in this appendix part. Okay? So the executive summary. Okay, this is your elevator pitch for your business plan. This is you're going to sell, instead of selling yourself in 2 minutes, you're going to sell your business in 2 pages. It's going to be 1 or 2 pages. It's going to be a snapshot of your entire plan. It has to explain your business, explain the market, your business opportunity, the market that you are expecting to serve, who are you, who are your partners, what is going to make your product or your service different, and how you expect your company to grow, okay? It has to be very interested, very well written. Please avoid to have any misspelling, any grammar errors, and make sure that this is spotless. Why? Because this is this is truly like your business resume. This is what's going to encourage the lender or the investor to take the time to read the rest of the document, okay? So that's why this is very important that you write it properly. In the next page, we are going to talk about the opportunity, right? So here you are going to basically tell the readers what business opportunity you have identified. And you're going to write it in a way that is clear and compelling. So you are not going to start a business if you haven't identified a lucrative opportunity, right? So you're going to use this section to describe it. You're going to describe the market, you're going to describe the current size of the market, and you're going to tell the reader how you project the market size to grow in the years ahead, okay? So this is the opportunity. So in the next slide, I don't know, give me one. Well, in the next slide, hope you're going to see, we're going to talk about the company, its products or services, and the strategy. So you're going to use this section to explain how the company is going to be organized and the mission of your company. What is going to be the mission of your company? Then you're going to talk about the goals that you have for your company in the 1 year or 2 year that the business plan is going to last, right? Like include. Because this is important because the investor or the lender, they want to know how you plan to grow your business, okay? So you're going to write that here. If your company is going to be selling a product and it's a product that you already have it, like you're already making it, in this part, you should include high quality pictures of that product. Or if it's something that it's a product that you don't have it market ready, here you should include an artist rendering of the final product. So your lender can see how your product is going to look and yes, can see the characteristic of your product, okay? So talking about the strategy. The strategy is very important because the strategy is all about, Alfredo, can we go to the next slide? The strategy is all about differentiation and competitive advantage, right? So here you're going to explain what makes your company different. If you are, if you created something, if you develop a product or a service or a software, then obviously you're bringing a new product to the market. So that's easy. If you identify a business opportunity, let's say something that is already a product or a service that is already happening in a big city like Dallas, but that product or services is still not here in Maitland, and you're bringing it, That's also kind of easy. But most of the time, what we have identified is kind of the same product or same service of our competitors, but we just have a better way to reach more people, or to make it more affordable, or faster, or better. Usually that would be the improvement. That would be the differentiation. So you need to make sure that your business plan explains this differentiation. And also, you need to make sure that you do have a sustainable competitive advantage. Why I'm telling you this? You found a way to make a product better. But if that way to make it better is pricier and you're going to make less profit than your competitor, then that differentiation is truly not sustainable. Because what could happen is your competitor can drop the price a little bit and you'll be out of the market. You understand what I mean? So you want to make sure that whatever differentiation you found on your product or your service is going to turn into a sustainable competitive advantage. Also, in the strategy, you should answer what makes your product more desirable, because maybe what you think is differentiate your product, that opportunity you found, it's not that desirable on the eyes of the customer. So you want to make sure that whatever is making your product service different is desirable in the eyes of the customer. And how you're going to translate this difference into a competitive advantage that is going to produce profit for you, because you are in the business of making money. So you want to make profit and you want to grow equity value for your business, in the future. So you have to make sure that you have identified this and you include this in your strategy. So the management team. So here you're going to talk about you, and if you have a business partner, or if you already have somebody that is going to start the business, but it's not a partner, but it's going to be your right hand in your business, and you already know this person. So you're going to talk about these people here. So the management team should answer these questions. Again, I'm not telling you to write the question and then write the answer. No. What I'm telling you is when you write this part of the business plan, make sure that you are answering these questions. So who are the founders of your business? Where have they worked before? What experience do you have or your partner have that is directly relevant to the opportunity that you are pursuing? Okay. What skills, abilities, and knowledge do you have that, again, is directly relevant to your business? Also, you have to let the lender or the reader of your business plan know that you're being realistic about your chances of success, that you have identified who else you're going to need on your team. Maybe because, we're starting, so I'm going to need an assistant, or maybe I'm going to need an office manager, or I'm going to outsource. All these should be also included here, because this is going to tell your reader that you have truly, do the whole thinking process, okay? So, how are you going to answer or respond to adversity? And listen, this is so important right now, because with this coronavirus, this has been like our daily thing during the past 6 months. So you have to let, again, your reader or your lender know that you have plan B and C already kind of sort out if something happens, right? How committed you are to your business and what motivates you. And trust me, this is important. What motivates you? What makes you happy? What is going to make you get out of bed every single morning to work for your business, right? So you have to let your reader know what that is. So finally, we're going to start talking about the plans, the marketing plan and the operational plan and financial plan. So the marketing plan, you have to have a very realistic marketing plan. Usually people think, well, marketing is like just how I'm going to promote my product and I'm going to do it through social media and that's it. It's a little bit more, okay? Marketing nowadays include a lot. So in your marketing plan, you should identify who are your customers, right? Who are the people you're targeting? You should identify the number of potential customers and potential sales revenue, because you don't want to have customers because I have like a million customers. You want to have customers because you want to have sales revenue. Like that's what drives your business, and you always have to have that in mind. If you're going to segmentate your customers, segmentation, I know this is a lot, but you know, don't get like, oh no, I'm never going to do this. No, don't worry. You can always start with like a draft and then start working and growing from there, right? So don't get overwhelmed. Also, in the marketing plan, you should include if you're going to focus on product customization or rapid delivery or purchase convenience, what are you going to focus on your product? Then you're going to talk about the ways to effectively access each segment. If you're going to access your customer through distributors, like you're not going to have a direct doing, you know, the final sell to the customer. You're just going to, you know, go, I don't know, you are going to make some food and you're going to sell to HEB, and HEB is the one that is going to sell to the final customer. Or if you're going to use a sales force, or if you're going to send by UPS, USPS, FedEx, you know, like via Amazon or e-commerce Amazon, like you need to identify how you're going to sell your product, okay? Also, if you're going to have sales and promotions and how these are going to be, how you have to know how the purchase decisions are made by your customers. That this is important. Also, you need to know if your customers are going to have price sensitivity and what this price sensitivity is. So price sensitivity is like how driven your customers are going to be on a change on the price of your product, okay? So maybe if you have a discount, like buy one, get 50% off on the second one, then that's going to be, you know, a hit success. But maybe your product is truly not like that kind of product. Like maybe you do wedding cakes. So offering a 50% discount on the second wedding cake won't apply so much. So you need to know what would be how this would work for your product or service. Also, it's important for you to know how much the cost of acquiring and retaining customers is going to be. People can spend a lot of money on marketing and truly not see that return of investment. So you have to understand how much is going to be for you, for your company, the budget to spending marketing so you can attract enough amount of customers. And last, you have to study your competition. You need to know the strengths and weaknesses of your competitors, and you have to include in your plan how your competitors may react to your company entering the market, okay? So that is also important. Okay, in the operating plan. So the operating plan, these two for me are, well, like, you know, the holy grail. These two have to be like very well done. Basically, the operating plan, you should answer the following questions when you write this one down. What suppliers relationship do you have for Envision? If you're going to manufacture, you have to know what supplies you're going to need, who are going to be your vendors, also how much inventory you're going to require to be able to produce your products, and also how much inventory of your product finally made you want to keep in order to, to keep the pipeline. If you're a manufacturer, do you envision your daily operation? And here you have to do map out or list the tasks that you like your company needs to do on a daily basis, and who is going to do each task, so the production can happen. And on this same note, you also need to know what part of the operation is going to be handled internally and what part is going to be outsourced. So this is in the operating plan. In the financial plan, basically, you're going to do three things here. You're going to share three things. You're going to first give your balance sheet at the moment of starting your business. Your balance sheet is like a picture, and it's going to say on that day what the company, what your business owns, and how those assets have been financed. Okay, this is the balance sheet. It's easy. You can get an accountant to do it, and this, and it's going to be on the moment you open. Then you're going to include income statements and cash flow statements. But these ones, because your company hasn't opened, you're going to be forecasting, okay? So the income statement is going to reveal the company's revenues and how much your company has spent to make those revenues. In other words, you're going to add all your sales, and you're going to subtract all the money you have spent to make that product and to make those sales. And also here, you should include the taxes that you're going to pay. And if you're asking for a lender to loan you money, you should include the interest that you're going to pay for that loan. So you truly know what is going to be your profit at the end of the day. Right? And the last one is your cash flow statement. So this is going to tell your lender or the reader how you are, which are the sources of your cash and which ones are the uses of your cash in the same period of time. How much cash you plan to get in and how much cash you plan to take out in the same period of time. That was very important. So these two, you're going to forecast them. But see how I told you that then this, if you do this right, this is going to totally work in your favor. So when you start your company, you can go back and see, is your company on reality behaving like you planned it to do, like you budgeted. And if it is, but if it's not, then you can adjust. Okay, you don't have to wait until, oh my God, 1 year's gone and I lost so much money. Okay, the key data will give the readers the big picture of your business. All this is going to give the readers the big picture of your business. And keep in mind that it's important for you to include your sales and your expenses, your forecast of your sales and your expenses. If you are applying for a loan, because this is what's going to tell the lender, okay, this is a business that is doable, or we need to work a little bit more. Listen, here at the BDC, we won't write the plan for you because this is something that you have to do for your business, but we can help you. So if you have an idea, or if you already have a plan, or you have an idea you want to start writing a plan, you can call us, you can come and talk to us, and we can guide you. And then during the process, we can help you adjust your plan so you have that solid plan that I talked about. Okay, so I'm going to let you now with my colleague, Mr. Paul McCourt, so he can do the final part of this workshop. Okay, have a good evening, and if you have any questions, I'll answer at the end. Bye.
Hi, I am going to spend the next few minutes talking about some potential sources to fund your business, and we're going to concentrate on the sources that we're asked about most often here at the BEDC. And those sources tend to be often questioned are small business administration loans. Now, the SBA is a government agency. These loans are not made by the Small Business Administration. They're made by regular banks, the SBA, but the SBA guarantees part of the loan. So if the loan is defaulted on, the bank is going to come out and receives at least some portion of that loan guaranteed by the federal government. The SBA has a number of different loan types, and we're going to talk about the two most popular. The first one being the standard Small Business Administration loan. It's called the SBA 7A loan. It is used to purchase real estate. It can be used for working capital. It can be used as a line of credit. It can be used to finance equipment. There are a number of different things, and often companies may have two 7A loans, one for real estate and another for either working capital or a line of credit or equipment. The SBA guarantees 85% of the loan amount, which means that the bank that you're getting the loan from is still on the hook, committed to at least 15% of the amount of money that you borrowed. The loan amount over $25,000, the 7A loans, the loan amounts range from $10,000 up to $5 million. So it can be a very substantial loan. But if it's over $25,000, that loan has to have collateral guaranteeing it. For real estate, then the real estate is the collateral that's used to guarantee the loan. If it's for equipment, say it's for a truck or a backhoe or some other piece of equipment, then the equipment is what the collateral is to back up the loan. But if it's capital, if it's a line of credit, you may have to put up other assets that you own as collateral to guarantee the loan. They also require that you participate in your business. They require a loan that you make at least a 10% down payment, meaning if the piece of real estate that you are looking to purchase, have the SBA loan help you buy, you're going to be required to put at least $40,000 into the deal. Then they would loan the $360,000 for the remainder of the debt to buy that piece of real estate. If you're looking at then you're required to put a 20% down payment. The down payment does not necessarily have to be cash. It can be what's called in kind. Let's assume that you are looking to start a company and you need $100,000 for working capital and equipment. And you have a pickup, a trailer, and a backhoe. And that equipment is valued at $50,000. You would be looking to borrow $50,000, and your down payment, your in-kind contribution to the company would be the pickup, the trailer, and the backhoe. So you'd actually have 50% down payment, and you would be borrowing the other $50,000. In kind is any contribution now. The bank, the borrow the money for your personal guarantee. So there go your credit. For a 7A loan, the standard minimum credit score is 680. Many banks will require a 720. I spent some time looking online at SBA lenders. The lowest credit score that I could find acceptable was a 675. So you're going to have to put in 10 to 20% of your own money or assets, and you're going to need probably a 680 or greater credit score for these loans. Now, the other SBA loan that we get a lot of questions on is the SBA microloan. These are small loans that range from $5,000 to $50,000. They're specifically designated for minority, women, and veteran-owned businesses. The standard minimum credit score is 640, and there are some lenders that will go down to a 580 credit score on these loans. Just like a 7A loan, you do have to have a down payment. The down payment on these loans is 20%. And again, it can be cash or in kind. So if you wanted a $50,000 loan, you would need to present a loan package where the starting capital that you're looking for is $62,500, and $12,500 of that is either your own cash or the assets that you're going to contribute to the company. That's your 20%. And then the 50% would be the loan that you're looking to get. Again, you go to a regular bank that is an SBA qualified bank. The loan term on these microloans is up to 6 years, meaning the payback period will be 6 years or shorter. On the 7A loans, the payback period is much longer. For real estate, the loan can be as long as 25 years. For working capital and purchasing equipment and a line of credit, they will extend loans up to 10 years. Now, the other question we get, besides the SBA loan, is, well, what if I just go to the bank and get a regular small business loan? The small business loan from a regular bank, a commercial bank, is going to be considerably different than the Small Business Administration loan in terms of its requirements. It again requires generally a 20% down payment that usually needs to be in cash. It can be in kind, but often they require that you put at least 20% of your own cash into the deal. Most banks require at least a 680 credit score, and many require that the minimum credit score is 720. All of these loans have to be collateralized, meaning that you have to have collateral underlying the loan. Either the collateral from what you're using the loan for, the real estate or the equipment, or you put up your own assets as collateral for the loan. And it must be an established, profitable business. They will not give loans to startups. On the SBA loans, it's very difficult to get a startup loan, but some banks will loan to startups, particularly the microloans. Now, obviously, we get a lot of people who ask, well, what about other types of loans other than an SBA or a bank? Are there other kinds of loans out there that have different credit requirements that I might qualify for? And fortunately, there are. There are a number of non-bank business lenders. Most of them you'll find online. They have their own credit qualifications for their loans, and most of the time, your credit score is not part of their decision-making process. Most of their decisions are based on other criteria about your business and about you. They take a hard look at what your experience and qualifications are. And most of them, frankly, want you to have a business that is up and running. Most of them will require that your business have at least a 6 or a 12-month history. And most of them require that you have a minimum monthly gross revenue, that is a minimum monthly income. And that minimum monthly income can range from $6,000 to $8,000 to $10,000 to $15,000 a month. So most of these companies are looking for operating companies. They don't have to have been operating for a very long time, maybe as little as 6 months. But most of them are looking that you have a substantial monthly sales of $6,000, $8,000, $10,000, $15,000. Some of them will do, very few, but there are some out there who at least advertise that they will finance startups. They make up their own interest rate, their own loan size. They determine how long they'll make the loan for. So basically, you make application, and if they will lend you money, the lender comes back and says, okay, we will do this for X amount of money, for interest rate for an X period of time, take it or leave it. It's not to the bank where you're going to ask for a 10-year working capital loan, or you're going to ask for a 20-year real estate loan. They're going to look at your business and you, and then they'll come back if they're interested and make you an offer. And it's pretty much a take it or leave it type of situation. As I said, there are a number of these lenders online, people like People Fund and Lending Tree, On Deck, Cabbage, Lendio. There are dozens of them that are all good, reputable companies. What you would need is go online, research, and find a company that has the credit criteria that meets your situation. Do a little bit of research to make sure that they are reputable, get some reviews on them, and then make a determination as to whether or not you're going to make application. These four are the types of loan situations that we're asked about most often. But of course, there are a lot of other ways to finance your company, whether you're using factoring, whether you're interested in using crowdfunding, maybe a loan from family or friends. Maybe you're looking to take on an active or a silent partner. We can work through all of these with you if you need help. I would encourage you, if you're looking to expand your business or start your business and you have questions about funding or questions about any of the topics that we've covered, I would encourage you to give us a call, set up an appointment. We're doing all of our appointments right now via telephone. We're not meeting with anyone in the office, but that doesn't deter anything between email and the telephone, text messages. We can get it worked out. I would encourage you to give us a call, set up an appointment, and see how we might be able to help you on your business.
Thank you, Paul. We'll now get started on the questions section, and let me get to things out of the way. Someone asked about how they could get a copy of the slides. If you are interested in the slides, please send an email to bdc@midland.edu and tell us that you want the slides, and we will get those to you. Someone asked about how they could access the recording. By next week, we plan to have the video of this session on our BDC webpage on the Midland College website. We'll put it under the Classes and Workshops tab. But if you get to the BDC webpage at the Midland College webpage, you will find them. We have two questions that have arrived, and one of them was asked earlier, was kind of responded, but let's go ahead and do it via the audio of the presentation. Someone said, can I be my own registered agent? Whoever wants to take that. And you'll need to unmute yourself, please.
Yes, you can be your own registered agent. The registered agent is the entity where if the state has reason to contact the company, they are going to contact the registered agent. So the registered agent is supposed to be an entity where the Secretary of State's office can always contact them in order to get a hold of the principals of the company. Principal of the company can be the registered agent, but it has to be an address and a contact that the state can always get a hold of. You can change your registered agent if you need to, but if you do change your registered agent, or if you're the registered agent and you change a phone number or an address, you have to contact the state and change your information so they can get a hold of you.
The next, thank you, Paul. The next question is, I was asked by Eliana, and the question was about what kind of interest rates would these loans have? Eliana, feel free to type in the chat. I believe you're talking about the non-bank business lenders is when you asked that question, but I might be incorrect. Paul, any input on possible interest rates?
Yeah, the interest rate will be set. Generally, these loans are much higher risk simply because they're not looking at credit history. They're not looking at credit scores. Generally,
Ileana wrote that she's talking about the 7A loans and the micro loans.
Okay, they will tend to be in the 8 to 10 or 11% range. Pretty much the general area for business loan.
Very good, very good. That being, we're about one minute till we wrap up, so I'll consider that a wrap. I don't see any more questions in the chat section, so I thank everyone for joining us. And remember that you can contact us with this information that's on the slide here. We are located at 201 West Florida. We're located in an outreach site called the Cogdell Learning Center. We are a Midland College facility. Please feel free to give us a call at 684-4309 to speak to any one of us. And again, if you're interested in the slides, you can use that email right there to contact us. A lot of you found out about us via our Facebook page. If you're not following us or seeing what type of information we share, please feel free to follow us on Facebook. All that being said, we thank you very much for attending this evening. Remember, this recording will be available on our website starting next week. Thank you very much, and y'all have a great evening. Bye-bye.